and women entrepreneurs throughout the greater Cincinnati area. Heritage Bank specializes in small business banking, offering the products and services you'd expect from a big bank alongside the personalized service you'd expect from the region's leading hometown community bank. Heritage Bank is a member of the FDIC and an equal housing lender. We also just passed our 30 years of operations and have a little over $1 billion in assets on deposit. So we are quickly growing into the realm of being one of the big banks in the area. I'd like to thank Jill and Aviatra for giving us the opportunity to go ahead and present this, and would also like to welcome Jerome Jones, who I've worked with for a number of years with the Columbus District Office of the SBA. An excellent resource, a very knowledgeable individual, and is always willing to help small businesses. So we're very lucky to have him today. But I've got to go to another appointment, and Jill, I'll turn it back over to you.
Thank you so much, Mike. So happy you could join us. Appreciate it.
Thanks, everyone.
Thank you. Well, Jerome, he gave you a good introduction, but I will welcome you. Jerome is the Lender Relations Specialist, and we're for SBA Ohio. Is that right? SBA Ohio?
We are the Central and Southern District Office now. So we cover the 60 counties in the bottom 2/3 of the country, or excuse me, goodness, no, not the country, of the state of Ohio.
Okay, great. Well, that's wonderful. We're so happy to have you here. And SBA is an amazing resource. In fact, we just posted a blog article on our website, aviatra.org, about the SBA and a lot of the resources that you offer. But we would really love to focus today, as I'm sure everybody and you knows, money is what everybody needs, as you just said. So let's focus on the different types of loans that you offer at SBA and how the women here can connect to them and which one might be best for them and how they can qualify.
Okay, I'm gonna share my screen here.
Okay, thank you.
Can everyone see a big blue SBA on the screen? All righty, very good. So the SBA helps your small business start, grow, expand, and recover. And we have a 4-pronged approach. We help businesses access the right tools at the right time. We help you build your business smarts and gain the confidence to move forward. We do those 3 things primarily through our resource partners of SCORE and the Small Business Development Center. Hopefully you're all aware of your SCORE mentors in your area, and definitely utilize the Small Business Development Centers. They are an underutilized resource that can help you with everything from putting your business plan together, putting your financial projections together, marketing, advertising, social media. And it's free because we pay for their operation. We pay for half, the state of Ohio pays the other half, so it's free to you. So use it, please. And we're also your small business advocates. So the SBA administrator position is now a cabinet level position that reports directly to the president. Now, these are our 3 pillars: capital, which is what we're most widely known for; contracting, which we're less known for. We have an 8A program, the number 8 and the letter A, contracting program that helps disadvantaged businesses gain access to federal contracts. Every federal contract has an 8A set aside, and what it's designed to do is allow your small businesses a spot at the table on federal contracting. It lasts for 9 years. After 9 years, you graduate and you can never be a part of the 8A program again. So definitely take advantage of that. Jill Nagy-Reynolds and Shonda Harris are the experts in our office, and I could connect you with them. I can send Jill their contact information. Keep in mind, though, you have to be approved for the 8A program. So they do look at your financial capacity, because if they say that you're 8A certified, they're also saying that you have the capacity to complete and bid on government contracts. And then we're also known for our consulting, mentoring, and business consulting. So mentoring is primarily SCORE, and business consulting and low-cost training is primarily the Small Business Development Centers. So let's see which resource partners right for you. So the SCORE, and there are a number of SCORE offices and SCORE representatives throughout the country and throughout the state of Ohio. That's the Ohio number. They're located actually in our building, in our office, though I have never seen one in the entire time I've been there, because they're always out helping and mentoring small businesses. So that's a good thing, actually. And that's the number. And the Small Business Development Centers, as I've stated, they are an underutilized resource. Please take advantage of that. And you don't have to be a startup. You know, they do have strategic plans, which is a business plan for an existing business. If you've been around for 5 years, congratulations. Now you need a plan to get you to the next 5 years, and then the next 5 years after that. The plan never stops, and the plan shouldn't be something that you do merely to get a loan. It should be something that you utilize, and it's an ever-evolving plan. What worked? What didn't work? Where do you need to pivot? So that really came into play in 2020. Those businesses that were ready and had the ability to pivot did better than the businesses that did not.
Probably won't be able to bring it down this last year.
Let me interrupt you for just 1 second, because Nikki,
I'm sorry, what?
can you see the,
I'm so sorry. I'm trying to do this training for Nikki.
can you see the slide now?
On your desk to be mailed, is it okay if I just leave it upside down?
Yeah, that's fine.
And I can see the last sticker.
Okay, I'm gonna go ahead and mute you and we'll move on. Thanks. Thanks.
No problem. So an ECDI, and I'm going to go over ECDI in a bit. Their office is, they have an office in Cincinnati, Columbus, and Cleveland. The Cincinnati office used to be on Vine Street. It is now on Mentor. They're now in the Alloy Development Company building. Again, great resource. They're also the state of Ohio's only SBA Women's Business Center. So take advantage of them. You don't have to be a woman-owned business to take advantage of them, but that is their primary focus. And those are the main contacts at our office. Shannon Feist is the lead economic development specialist. So she normally sets events like this up. Nicole Picard in Cincinnati is also a lead economic development specialist who does the same thing. Talia Amador is our office administrator. She keeps us all in line, tells us where to go, when to be there. And then that's my contact information. I'm a lender relations specialist. Let's talk about SBA lending. The benefit to you as a borrower is that we allow for reasonable terms that you may not otherwise qualify, and smaller equity requirements. So most of our loans only require a 10% equity injection, and there's one instance where that can be as low as 5% from you, and I'll go over that shortly. And then obviously a longer repayment term means lower payments, which increases your cash flow, more money back in your pocket. So again, we allow for projection-based lending. So if you don't have cash flow historically, meaning when you're going to get a loan, if you can demonstrate that you could have paid for this loan past 2, 3, 4, 5 years, that's great. Those are easy to do. That means you don't have to do anything any differently to qualify and pay the loan. Those are easier for banks to do. However, with SBA's help, we allow for projection-based lending. So if you have an upcoming contract or you're getting a piece of equipment that will allow you to increase your capacity, that will lend to the credibility of your financial projections, and therefore we can lend based upon that. With SBA's help, you can lend with collateral shortfalls. That doesn't mean that we don't want our loans collateralized. What that means is if that is the only weak leg on the stool, the collateral is a little short, that's a perfect use for the lender to use a 7A loan. And then lending for multiple business purposes. Our 7A, the number 7 and the letter A loan, guarantee loan, is our most popular loan. It's all done by SBA approved lenders. And at this point, that's pretty much every bank and credit union out there. And you can use it for any legal business lending purpose. Another great use of the 7A program is financing changes of ownership. So if you wanted to purchase a building, you want to buy a building, or excuse me, a business, that's the one instance where As low as 5% can be directly from you, because the seller can actually put 5% towards that 10% down payment. Now, you cannot repay that seller's 5% because if we're calling it equity, we have to treat it as equity. So it's on full standby for the life of the loan. You can even refinance existing business debt, even personal debt, if it can be easily traced back and directly used for the business.
Jerome, how would you like to handle questions? Would you like people to put them in the chat and then we'll go over them at the end, or do you want them to just
That
unmute?
would be perfect. That would be perfect.
Great, thanks everybody.
And what can you use it for? So first of all, you can get as little as $500 now. Please don't ask the lender to do a $500 business loan. But I can tell you when I was the VP of lending at ECDI, I did do a couple of $2,500 business loans. So that's not a problem. All the way up to $5.5 million. And again, for any legal business lending purpose, working capital, lines of credit, refinancing debt, furniture, real estate, machinery and equipment, construction, remodeling, pretty much anything. Now, you must be a for-profit business. If any of you received an EIDL or a PPP loan, during the pandemic, our COVID programs, we did allow for nonprofits because we realized that both for-profit and nonprofit were equally affected by the pandemic. So we allowed it just for those programs. Now we're back to normal lending. You must be a for-profit business and you must do business in the US, be physically located and operate in the US or one of our territories. So these are ineligible businesses. Again, nonprofits, no passive holders of real estate. So what that means is you can't use an SBA loan to say buy a strip center. Your business has to occupy at least 51% of the real estate. Cannot be owned by non-citizens. The business itself cannot be involved in gambling. You cannot restrict patronage. Really don't run into that much anymore. There used to be a fitness center called Curves that was only for women. Those were not eligible, but I don't see those around anymore. The business cannot promote religion. However, we can lend to, say, a daycare that happens to be located in a church, as long as they don't restrict patronage to just members of the church, that would be eligible. No consumer marketing co-ops, so no pyramids. The business cannot be of a prurient nature, so no adult bookstores or gentlemen's clubs or anything like that. It cannot be to an individual of poor character. That's normally fleshed out in what's called the 1919 form. We answer 3 legal questions. That is not to say if you had a scrape with the law in the past that you're automatically ineligible. There's a short hurdle that I always ask. Is it remote in time or minor in nature? If it's remote in time or minor in nature, you may be eligible. And no prior loss to the government. So obviously, if you've defaulted on an SBA loan, that's a no. But also a VA loan, an FHA loan, a student loan, any of those that are government programs, you will not qualify for an SBA loan. You can be delinquent on federal taxes if you have a payment plan in place that you've been actively paying on for preferably 12 months, then you may be eligible. So these are our 3 main programs, and I'll go over each of them. SBA 504 loan, an SBA 7A loan, 7A guarantee loan, and an SBA micro loan. So the 7A loan is our most widely known and utilized program, primarily because it's done by all the banks. The standard 7A loan goes up to $5 million. The small 7A loan goes up to, and now it's $500,000 actually. With an aggregate exposure of 85% and 75%. Now, let me explain that to you with 2 things. First, until September 30th, all SBA loans of $500,000 or less have no SBA fee. So that's a big deal. So take advantage of that. Also, that 85 and 75. So our guarantee, we actually act as an insurance company for the lender's money. So we pay them a percentage of any loss that they incur. So let's say you get a $200,000 SBA 7A loan and you use it for equipment and working capital. And after 5 years, things don't go as planned and you default on that loan. Well, the lender is going to sell whatever collateral they used. They're going to exercise their personal guarantee on all 20% or more owners of the business. Whatever they don't collect, since that original loan was 200,000, we would cut them a check for 75% of any loss that they incur. If that original loan was 150,000 or less, we'd cut them a check for 85% of any loss that they incur. To the left, you see that 3.75% per $1 million aggregate exposure. That's just 75% of the 5 million. Again, any legal lending purpose, any legal business lending purpose, 7A will qualify for it. Now, the SBA 504 program is a little different. It is primarily used for real estate. When I say primarily, I mean 99.99999% of the time. I'll tell you why in a second. It's a participation loan, a 50-40-10 split typically, in which the lender, any lender, so for the 504 program, they don't have to be an SBA approved lender. They're just doing a conventional loan and they get a first lien position. So let's, for simple math, let's say you're buying $1 million building. The lender would do a $500,000 loan and they'd get a first lien position. So the only way they lose money is if this building sells for less than half of its appraised value. And I've never seen that happen in the decades I've been in this business. I've never seen that happen. So they're in the catbird seat as far as collateral is concerned. You as the borrower would put in 10%. And a CDC on behalf of the SBA in the Cincinnati area, it's Alloy Development Company, which used to be HCDC, Hamilton County Development Corporation. Then they changed it to Horizon Certified Development Corporation. Now they're Alloy Certified Development Corporation. They would do that 40%. Now, the other advantage to you as the borrower is that it's a fixed rate. That 40% is fixed for either 10 or 20 or 25 years. It only comes in those 3 flavors. And the reason that I said it's done for real estate almost exclusively is that you could theoretically use it for a single piece of equipment that has a 10-year useful life. There's just not much in the way of equipment anymore that has a 10-year useful life for IRS standards. So that's why it's primarily used for real estate. And the most recent rate that I saw was 25-year fixed was just over 6%. So that's an outstanding rate, particularly for commercial. So take advantage of that. Now, a couple of instances where that 10% would go up and the 40% would go down. If the real estate is a single use special purpose, so think car wash or hotel or something like that, that would be single use special purpose. The appraiser is who determines that. And that would mean an additional 5%. So it'd be a 50, 35, 15. Or if the business itself is a startup. So by SBA standards, anything less than 2 years old is a startup. It would be an additional 5%. Now, keep this in mind. If you're purchasing a business that owns real estate, even if that business has been around for 50 years, since you're purchasing that and there's a management change, it's a startup all over again. So it would be 15%. I've rarely seen a startup and single use special purpose, that would be 20%. That being said, I've never done a hotel loan that was less than 20%. They're always 20% or more. Car washes, probably also, because it can't easily be converted into something else. And our SBA microloans. So SBA microloans go up to $50,000. ECDI is the only SBA microlender in the state of Ohio. They also happen to be the nation's largest SBA lender right now. So another feather in their cap. Now, to say that microloans go up to 50,000, that's just SBA participation. ECDI has well over 40 different pools of funds, so they can go higher than 50,000. Our participation in it just can't exceed $50,000. They're also a community advantage lender, which is just a 7A loan in different clothing. It's the 7A for our mission-based lenders. Now, with the microloan, you can only use it for equipment, inventory, and working capital. You can't use it for real estate, and the reason being, bullet point number 4, the term only goes out to 5 years. That's a horrible term for real estate. You can get a much better term. So it's only used for equipment, inventory, and working capital. Typically, 10% down payment. Their interest rate is by funding source, but on average, it's about 10%. Well, that used to be a higher end of commercial lending interest rates, but right now with prime being 8.25%, typically banks are right around that 10% also. So keep that in mind. It's making microloans look pretty good right now. And most businesses need less than $100,000, particularly in early stages. That's the Columbus headquarters. Again, their Cincinnati headquarters is on Mentor. I don't have the exact address, but it's in the Alloy Certified Development Company building. Now, Lender Match. Lender Match is a link on our website. Think of Lender Match as eHarmony for lenders and borrowers. So we just provide the website. The lender sets up a profile. I would say something like, we're looking for loans up to this amount in this geographic area for these industries, something like that. They can tailor their profile any way they want to. You as the borrower would go to Lender Match. Again, it's just a link on our website, sba.gov/lender match. You would put in the deal that you're looking for. Again, let's say you're looking for $200,000. You want to use it for equipment and working capital. Well, the lender just goes to Lender Match from time to time and just uses it as a free lead generation system. Doesn't cost them anything, and it doesn't cost you anything. So we just provide the spot for you guys to hook up. Then we're out of it. So just before you go looking for the money, make sure that your business plan is together and tight. Make sure you have your expense sheets down. So often in my banking days, heck, even now, when someone calls and they say, I need a business loan, and I ask how much, and they say, well, how much can I get? That is the wrong answer every single time. You should say, I need $200,012.57. Even if it's wrong, you've at least put some thought into that number. So make sure your expense sheets, your sources and uses statement is together. All of these are parts of the business plan, and the SBDC can help you with that, again, free of charge. Your financial statements are the most important thing because a lender is going to look at that first. A lender is not going to pick up your business plan and go to your marketing section. That's not what they're going to do. The most important thing is, can you prove credibly that you can repay that loan? They don't even look at the collateral section first. That's secondary. The hope is they never have to sell the collateral. They want to be repaid by cash flow. And make sure if you need financial projections, pretty much every business has to complete them, but make sure they're together, again, and credible. The answer to your financial projections can't be, well, if you give me this loan, I'm just going to work smarter and harder and longer hours. No, it has to be based upon something credible if there's going to be a large increase in your revenue and profit. That is my contact information. Dave Townsend is my counterpart. That's his contact information. It's always easy at the SBA. It's our first and last name with the dot in the middle at sba.gov. And I will stop sharing and field any questions you may have.
Great, thank you. So we do have at least one question in the chat. So Gina Schenk asked, does having a life insurance policy to cover the cost of the loan beneficial in case of death or terminal illness?
So that is something that the lender determines. That's not going to come up in your normal course of business because that's not a source of repayment. Like I said, the last thing we want is for you to die and be repaid by life insurance. We want you to live, operate your business successfully, generate enough cash flow, repay the loan. That way they can do another loan as you grow.
Okay, great. Does anybody else have any questions that you want to, you can just unmute and chime in, and if we probably won't get too many, we'll be all right. Another one, is there a direct contact for the Montgomery County, Dayton area?
For SBA, Nicole Picard is in our SBA office. I know her email. I do not have her phone number memorized, but the email is simple, Nicole, Nicole, .Picard, PICKARD @sba.gov.
Thank you. And Kelly Walker asked, the 504 is used for real estate that's being utilized by 51% or more by the business. It is not for real estate investing. Is that correct?
100%. I'm glad you picked up on that. 100%. Now, the good news is you can permanently lease out that 49%. You can, however, include it in your cash flow because that's just cream. Your business has to show the ability to repay the loan. Now, obviously, you get to pocket that 49%. You just don't get to count it towards your cash flow coverage.
So Mo said, do you have any resources for Northern Kentucky?
I believe the SBDC in Cincinnati can cover Northern. That little area down there is sort of like one big metropolitan area.
Yeah, we do have a contact for the SBA in Northern Kentucky, in Kentucky, which is Michael Ashcraft. Is that his last name?
Mhm.
Ashcraft, ASHCRAFT, I think, right?
And my counterpart down there, I know, is Dana Winston.
Okay.
DANA.Winston@SBA.gov.
Perfect. So both of them are, well, I can speak with Michael. He's very helpful. And then Dana, I'm sure is as well. And then for the SBDC, we have somebody here who's actually in our office. There's going to be a personnel change. So there'll be somebody named JD here every other week. So just reach out to me at Aviatra. I'll put my email in there real quick and I can hook you up with the local SBDC person. I think there's one in Cincinnati. I mean, there's one that covers Ohio and there's one that covers Kentucky. So, okay. So then here's another question from Mary. The Kentucky State Trade Expansion Program is also an SBA program. Well, this is informational. Okay. STEP is administered by the Kentucky Cabinet for Economic Development. Great. So for businesses looking to export, she included her email. Thank you very much. And a website there for information. That's great. That's an additional program. Yes, I will send, the slides. Are you willing to share your slides, Jerome? Okay, thank you. I'll send the slides out to everybody afterward, along with a link to the recording. What personal and business credit scores, if any, are generally needed to increase the odds of approval for SBA loans? It's a good question.
You're never going to paint a banker into a number. So never going to say,
She
well,
said
if you
generally.
have a 650, you're good because there might be something on the credit bureau report that limits them. So typically, if you're 700 or above, that's not a problem for a conventional lender. Now, ECDI, a micro lender, they can accept scores lower than 700. They can accept scores possibly lower than 600, but it depends on the reason. So if it was due to a loss of income, you lost your job, or you got sick and couldn't work, those would be more acceptable reasons. Now, keep in mind, the credit bureau report actually tells that story. It will show paid as agreed up until that point where you lost your income, lost your job, or got hurt. Then you didn't have any income, your ability to pay your bills went down. So those two things have to match. So, when I worked at ECDI, I did a 585 credit score once. But again, that reason matched up. Now, if they told me, well, I lost my job, I looked at the credit bureau report and it says, well, you never paid your bills on time. It had nothing to do with you losing your job. Well, that would not match and that would not work.
Okay, that's helpful. Thank you. Okay, so Dominique has a good question. So asking about the promoting religion. So she speaks about God on her business page and her regular page. Will that make me ineligible? I don't look at it as promoting. That's just where I am in life.
Yeah, I don't think that would be considered promoting, and you wouldn't limit your business to Protestants or something like that. But so I don't think that would be considered promoting religion if you just mention something like that.
Great. So is it more about who you serve and less about your own personal beliefs?
So I've never been in a situation where that has come up, where someone promoted it to the extent that it was part of the lending decision.
Great.
So again, if you, that daycare that happens to be located in a church, obviously they have some belief system,
Mhm.
but they're allowed to get a loan.
Great. That's helpful. And she says, thank you. She was very pleased to hear that. So Venice asks, how many SBA loans can you have? And how long can the funds sit in the bank and not be touched, kind of as an emergency fund, I'm assuming?
So there is no limit on the number. It just can't be an aggregate exposure of more than 5 million. So there's a lot of room there.
Okay, great.
Now, as far as how long they can sit in the bank, again, there is no official expiration for that. However, if it's just sitting there, that's telling me that you really didn't need that money. So in your business plan, in your uses statement, it should spell out exactly what you're going to do with that money, what you're going to use those funds for. Well, it should be used for that. A lot of businesses say, well, I just want money in the bank to cover 12 months worth of rent. That's not a good use of funds. You could have some working capital for ramp up. 12 months that's a very long runway and probably not acceptable.
But like if you were planning a big purchase and you just hadn't made that purchase quite yet, it can sit for a little while till you're ready.
Absolutely, absolutely. But in your uses statement, it would say, I'm going to use it to purchase this machine, and there's some shipping time. That's is the case often, particularly with large machinery and equipment. Sometimes it comes from overseas, and it might be 3, 4, 5 months before that equipment comes. So
Good to know. Thank you. Did I miss anything? Anybody else have anything they'd like to ask or add?
yes, sales and marketing is an acceptable use of funds.
Thanks, Julie. Yep, sales and marketing. Great. So that would just be part of sort of working capital, like they would show that they have that's what they need the money for?
And actually, particularly for a young business, that's one thing that better be there. These things, this is what a lender looks at. A lender wants to make sure you've thought of all of these things.
That's a great question. Well, oh, here's another one. Can you change what you use the funds for from what you originally said?
Yes, to a certain, particularly with working capital, yes. Now with real estate, you can't, because there's no, unlike with a home loan or an auto loan where you go get pre-approval, say, well, they're good for $500,000, just go find a building. It doesn't work like that on a business loan. They need the exact building because they have to do an appraisal, and that appraisal may say, well, there must be an environmental performed because it used to be a dry cleaner or something. So it has to be set aside. So that can't be changed for real estate. Even for large machinery equipment, is pretty difficult. If you choose to get a different kind of printer, okay, that's no problem. So there's some wiggle room there.
Good, thank you. Can you share the contact for Dayton once more, and I'll type it as you talk?
Well, let me look it up real quick.
Okay, thank you.
So Dayton, we have Alex Coles.
C-O-L-E-S?
Kohls.
At SBA.gov, right?
Yes, I might even be able to find his number, possibly.
Great.
If he put it into his, if you put it in his signature line.
Okay.
I don't see it in his signature line.
All right. So he sounds like he prefers email anyway.
Yes.
So another question, do lenders prefer one type of loan over another? So for example, the 7A versus the micro loan?
No, so ECDI is the only micro lender.
Oh, okay.
So that's the only place you can go for that. As far as, so lenders typically go for the 7A first because they do all of that. So it's kind of up to you. I don't want to throw any shade on our SBA lenders, but as a former commercial lender, let's say you're looking for $1 million building. If you've got the 10% down and everything else looks good, you put in 10%, I, as a loan officer, get a $900,000 loan. That goes a long way towards my goals. However, if I do a 504 loan where you still put 10% down, but 40% of that money is a fixed rate for up to 25 years. If my loan goes down to $500,000, I'm losing $400,000. So, arm yourself with the knowledge of what's best for you. And I'm not saying 504 is always better than a 7A, but there are certainly circumstances where it is advantageous to take advantage of that fixed rate.
Do you feel that the lenders would be able to walk them through what would be
Yes.
best for them? Okay.
Yes, but I always say go in as an educated borrower as well.
Which everybody now is, so thank you. Also, another question, can the funds be used for paying employees?
The short answer is yes. But again, it all depends on where you're at in your stage of growth. Obviously, if you're a young or startup business, you're going to have to use some of the funds for that. If you're an existing business, the lender would like you to be able to pay that through your cash flow. Now, if you're expanding greatly and hiring new people, okay, well, now we're back to, okay, there can be some funds in there for new employees.
Great, and this would all be under like the working capital category?
Absolutely.
Okay, terrific. You all have some great questions. I'll give it another couple of minutes here. Feel free to just chime in if you're typing, so I don't cut you off. All right. Well, thank you so much, Jerome. This has been wonderfully helpful. And as everybody, Jerome will share the slides with me and I'll pass them on to you along with the link to the recording. And so pleased to see you all. And we hope that you can stay engaged with Aviatra. We love helping women-owned businesses. Oh, Dominique had one more. Can you do more than one loan at a time? I think you said that's okay.
Well, if she means at the same time, it's possible to do an SBA 504 loan and a 7A loan at the same time. That is possible. There's no reason to do two 7A loans at the same time because you can use it for the same thing.
Okay, like if you needed more money.
Yeah, you could do that. And since the 504 is for real estate, let's say you need real estate, 504 is perfect for that. But you also need working capital. Well, you can't do working capital with the 504 loan. So then you would do a 7A for that. So
what if you got a 7A loan for working capital and then suddenly needed more money? Could you go back and?
You can get an increase. Yeah, it won't be two loans. They usually just increase the existing one.
Okay, good. Yeah. Oh, yeah. More than one at a time. Yep. That's right. So you understood what she meant, Jerome. Yeah. Good. Well, everybody, you also have Jerome's email here and ours. And so please reach out if we can help you further. Thank you all so much. I wish you luck with your businesses.
You guys take care. Jill, give me about 5 minutes. All right.
You got it. Thanks so much.
Thank you.
Take care.
Bye, everyone. Thank you. Bye, Tracy. Thank you. Regina. Great. All right.
I think it was a good crowd.
It was great. Thank you so much. I'm glad you could join us.
Yeah.
I'm going to stop the recording.
And we would have been packed house if they all came here.
Yeah. Very true.